Hey, welcome to Talk Tickers. Today, we are digging into Neogen's latest earnings report. And let me tell you, this was a big one. The market had a huge reaction, and it really looks like this could be a major turning point for the company.
All right, let's just jump right in with the number that got everyone talking. The stock shot up nearly 29% in pre-market trading right after their call. Now, a pop that big, you know something's up. So let's break down exactly what happened.
So, what caused this explosion? What was the spark? Well, it all kicked off with a really solid beat on their numbers. They outperformed pretty much everywhere, and this totally caught the market off guard because, frankly, a lot of people were expecting bad news.
Yeah, and we're not talking about a small beat here. Neogen absolutely crushed it. Just look at the revenue number, almost $17 million more than the consensus estimate, and their adjusted earnings per share, way higher than what the analysts were even hoping for.
Let's zoom in on that earnings surprise for a second. That 10-cent adjusted EPS, that wasn't just a little better than expected, it blew right past the highest analyst estimate out there. This was really the first big sign that the whole story around Neogen might be changing.
Okay, now this is where it gets really interesting. If you just glance at the top-line revenue, you'd see it was down almost 3% and think, wait a minute, but that's because they sold off a piece of their business. The number you really need to focus on is the core revenue growth. It actually went positive, plus 2.9% for the first time in a year. That's the real health of the company we're talking about. So let's keep going because, honestly, the numbers are just the result of what's happening behind the scenes. The real story here is the big strategic change going on inside the company. We've got new leadership, and they've brought a completely new game plan to the table.
And you can hear it straight from the new CEO, Mike Nifty. He made it super clear on the call that this quarter wasn't some kind of lucky fluke. No, he framed it as the very first concrete sign that the big transformation he's leading is actually starting to work.
So what is this big plan? Well, it's actually not some crazy complicated strategy. It's really a classic back-to-basics approach. First up, stabilize the core business. Get costs under control. Step 2, make the operations run better, more efficiently. And third, bring in some heavy hitters, experienced leaders who can really get things done. And when you dig a little deeper into what they're focusing on, a couple of things really jump out. First, they said the manufacturing transition for their huge Petrifilm product is on track. That's a massive project, so that's great news. And second, they're completely changing how their sales team operates, moving away from just selling a product to providing a whole integrated solution for their customers. That's absolutely key for long-term growth.
Okay, so this all brings us back to that huge stock pop. It's pretty clear that investors weren't just cheering for one good quarter. No, they were buying into the whole story, the promise of a brand new chapter for Neogen.
Which, brings us to the big question, right? Why would a core growth rate of just under 3% cause a nearly 30% rally? That number by itself isn't exactly earth-shattering. The answer? It's all about context and what came next.
And here it is. The answer is right here in their guidance. See, management didn't just beat the numbers for this one quarter. They actually raised their forecast for the entire year. And let me tell you, raising guidance like that, that's a massive signal of confidence. It's them telling the market, hey, this isn't a one-time thing. We think we can keep this going.
That one move, the beat and the raise, it completely flipped the script on this company. It took a stock that everyone was pretty down on and forced them to totally rethink everything. Suddenly, the conversation wasn't about all the past mistakes. It shifted to what the future could look like with this new, credible team in charge. All right, so the big question now is, what's next? Where does the stock go from here? Let's talk about the key things we need to watch for, and then I'll give you our official rating on this whole turnaround story.
Looking ahead, the next earnings call is going to be all about proof. Show me the money. Investors are going to want to see that the margins are getting better because of that Petrifilm project. They'll be watching to see if the new sales leadership can actually turn all this talk into real sales growth. And, of course, everyone will be looking for an update on selling the genomics business to help pay down some of their debt. These are the things that really matter now.
So, with all that in mind, we're kicking off our coverage here with an outperform rating. Here's our thinking. We believe this new management team is playing it safe, being deliberately cautious with their guidance. And what that does is it creates this really nice setup where they can keep beating expectations as their plan starts to really take hold and gain momentum.
So, to wrap it all up, the early signs of this turnaround are definitely exciting. But let's be real, these things are never a straight line up.
It is absolutely crucial to keep an eye out for those proof points we talked about in the next quarter. And as always, please remember, this is not financial advice.